Hello everybody, I'm Roger from Precision Trading Systems. This is a demonstration of the depth gauge trading strategy and the importance of selecting the right time frame to achieve good results. Disclaimer: trading the stock market, you can lose lots of money. Historical performance is not indicative of future success. Hypothetical performance results have many inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk of actual trading. For example, the ability to withstand losses or to adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. There are numerous other factors related to the market in general or to the implementation of any specific trading program which cannot be fully accounted for in the preparation of hypothetical performance results, and all which can adversely affect trading results. Futures, forex, and stock trading contain substantial risk and are not for every investor. An investor could potentially lose all or more of the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading. Only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of results. Information presented is for educational purpose only, and the opinions expressed are those of the presenter only. All trades presented are not traded in a live account and should be considered hypothetical. Okay, so the disclaimer is out of the way. I bet you really enjoyed that. It was very exciting. So this is the depth gauge trading system, which I developed a while ago. And it uses pattern recognition, and it's using a filter, which is below. This is a trend filter. And when it's blue, when the blue line's above the red line, that denotes a bullish trend. And when the red line is above the blue line, it's a bearish trend. The current setup is for long only. So you can see this is a downtrend and there's no trades at all. And what's nice about that is when the market crashes, you won't be buying anything while the trend is down. This is recorded on August the 28th. It'll probably be the 29th when I've finished, because it's very late. There's another example, no trades at all. Then the trend changes and there's a trade which lost. Now this is one of the worst time frames out of those tested. I've gone from 1 minute all the way down to 30 minutes. And I'll show you the strategy performance report, which is very, very ugly, because I'm supposed to give you a balanced view. So it loses money in this time frame. The equity curve is shocking. Starts off nice and then it just goes wrong. The best time frame under the standard settings was 6 minutes. I've produced an Excel sheet showing all the distribution of the profits and losses and the number of trades. And while that's loading, you can have a look at it. A few hours work. So this is the time frame down here, and this is the profit. So you just looked at this one. I did this yesterday, so this is going to be a few quid different. That's the reason. So here we have the profit, and the best one is this one, which is a 6 minute. And this column is just my notes. So I'll put a 1 if the equity curve is usable by me. So would I use it? Yes or no? It's not always easy to give a definitive, but I've tried to be strict. So this time frame 10 to 16 were all yeses, as was 5 to 8 and 3. All these slower time frames were all pretty ugly. So let's see if that's loaded now. I've got the same amount of data. I'll just prove this to you. It starts on the 1st of January 2022 and it runs until today. And this is the SP Futures, which is $50 a point. For those of you who are trading a small account, there's micro S&P, which is the ticker is MES. So with the same settings, the profit, the equity curve looks identical, but the profit was about 8,000 instead of 87,000. So the risk is 10 times less and the reward is 10 times less. So let's just get that back up. Okay, so this was the best one. Strategy performance report. This is still the standard settings set with long only. The interesting bit is the Sortino ratio is 1.5, which is defined as being good. Can't say anything more than that, but to me it's good. Can't say anything other than that. The risk reward ratio is quite low. The percentage winners is quite low because this is not running trades, it's taking profits. And the setting, which I've started off with, so you can see the equity curve is quite nice. There is a nasty draw down here, 30,000 down to about 15, 16 there, 16,450. But this is not being optimized at all. And I'm demonstrating how to optimize without optimizing. So it's the same date range, the same settings. All I'm doing is changing the time frame. So this is a 6 minute. Just look at some trades close up. So the depth gauge trading strategy uses pattern recognition. And there's one of the examples. To the computer, these are the same. That's the same as that. That's the same as that. That's the same. These ones lost and these ones won. Some of them will look a bit different to the eye, but to the computer, they're the same. So basically, the trend has to be up, and we're looking for a little bit of strength. And in the setting, there's a very fast moving average here, 7 period moving average, and that has to be rising for the trade to go on. And the pattern uses this thing called long depth. I can't say too much about it because you'll be able to make your own one, wouldn't you? Instead of buying this one. Sorry. So anyway, that's how it works. And it's taking profits quite early. So I'll look at another time frame. Let's go to 1 minute. It's just going to take a while to load. So we can look at this Excel sheet again. Excuse me. So after doing all this, these are the settings which are the standard settings. So the stop is 4.1 ATRs away, and the target is 5.25 ATRs. This is the date range. So next, I went to sheet 2. So basically everything above 20 minute was not very good. Everything below 20 was workable. So sheet 2 is only going to 20 minutes from 1 minute. And this time, the target was changed to 5.1 and the results improved. So this is improved by 5,800 and this one improved by 14,100. Everything else is the same. It's the same date range and the same settings. And the equity curve usable is slightly different, but generally the same. But the purpose of this is to find a bell curve. So there's kind of a bell curve here, but it's not that good because this one's too low. And what I look for, that is a bell curve there. But this one's a bit higher. But it's a nice even climbing up to the best one and then falling down. So in this case, 14 minutes looks robust because either side of it is working. Whereas that one's not so robust because this one's very low. This one's not robust because that one's very low. So I always like to find a good shape. If this makes sense, I hope it does. So to repeat, the profit generated is shown here. The highest one being that one, which is point number 6. And then, so all I've done is optimize one thing at a time. It's a very important point with trading systems not to over optimize. And according to Jack Schwager, who wrote Market Wizards books, he said quite rightfully that the more you optimize a trading system, the less likely it is to work in the future. And I've had people that I know have gone and bought massively fast computer chips and they've done horrendous amounts of optimization with lots of different factors all at the same time, trying to find the best settings. So if you look, this is now loaded, but just finish what I'm saying here. If you look at all the settings there are to choose from, you've got all these. Now, if you imagine optimizing all that lot at once, or even half of them, it would take a week or a day. And by the time it's finished, the person doing the testing would have forgotten what they're doing. So Ed Sikota, who's one of the world's experts, his suggestion is to freeze all the variables and just do 2 at once. This way you've got more chance of it actually working in real trading. My personal preference is just to do 1 at a time and understand what's happening as you observe the changes. So this is M1, 1 minute. I just find an interesting bit. So there's a nice gentle uptrend, and you can see the trend indicator was blue all the way until here when it started changing its mind. So the system took 4 nice trades and another one there. This was blue again. This trade closed in between a period where the trend was down which is allowed by the rules under these settings. However, you can set it so that if the trend changes to bearish, you'll exit the trade. Frankly speaking, even though it sounds like a good idea, most of the times I've done that, it produces a less profit, which is kind of a paradox, but I've left it in because it's a nice feature. There's another nice price action section where the trend is up. Lots of nice trades. There's a loser. Because we're using average true range for the stop, you can see this trade was very small. So in at 79, at 76, whereas another trade where the volatility is higher, there's another little one here, very small losers. When the volatility is higher, the average true range automatically gets wider. So there we go. There's one where it's a bit more volatile. In at 88 and out at 85, a bit more. So we'll look at the equity curve. This is better than the equity curve of the screenshot of the front. Only 15,000. There's a lot less profit. There's a huge amount of trades. 4,717. Maximum consecutive winners 11, and 11 losers in a row as well. Bear in mind, the largest losing trade, 5,000. 7.05 trades a day. But for me, that's way too busy. But these are the standard settings. So you can see the equity curve starts off very badly. There's a nice patch, a bad patch, and then from here starts getting better, but it doesn't fit the frequency of the market. You can just see it's all up and down over the place. It's very spiky, big spikes up, big spikes down. Not something that I'd be comfortable with. I'll go to the Excel sheet again, back to sheet 1. I'll just pick another one which was kind of okay. So this one, 11 minutes. That's kind of robustish. Change the time frame. Now, if you haven't got these all on your Ninja Trader, I add them. So you just click on this configure, and you can add a time frame. So you want to add 67 minutes, and then you have to move it up and down. There it is. So you can move it up. I'll just do that again. It's a good idea to test obscure time frames. Just because you won't be using the same time frame as everyone else, and therefore you can unlock different signals. Sometimes they could be worse, sometimes they could be better. You don't know, but if you don't test them, you'll never know. So it's a good idea to test and test and test lots and lots. So now we're looking at 11 minutes, another trend up, lots of winning trades, and then find somewhere where it's losing to show you the balance. Sometimes there's whipsaws within whipsaws. So there's the trend is up as defined by the indicator. And that one got stopped out here at the bottom. So for a stop that was slightly wider, would have stayed long and got out up here somewhere. And this one, a stop that was wider, would have got out here and lost more. So it's never a good idea just to look at one mistake. You've got to test a large amount of data to get anywhere with accuracy. So I'm still on sheet 1 at the moment. So these are still the standard settings. So number of trades is a lot less, 400, 0.63 trades a day. Sortino ratio is fairly reasonable, I can say. And the equity curve was somewhat more gentle than the 1 minute one we looked at. But it's still got these up and downs, kind of spiky. I don't like spiky equity curves. Not good for your stress levels. So you can trust me when I say I've done all these, and these are the results. So moving on to sheet 2, I changed the target to 5.1, and I got all these results. I'll just prove that. I have to disable the strategy for a moment. Roll profit target. So it's a small change, but that made a difference. Also, just in case you're not sure, exit on session close is disabled. So these are being held overnight. You can tick it, it will change the curve quite a lot. And you just have to wait for that to load. So now the settings are as per sheet 2. I'll just pick another one of these at random. One I haven't done, so let's do 5 minutes, which is quite popular. So you notice this is the difference between the profit from sheet 1. So 73,000, this was 77,000. So the profit's gone down by making this change for the 5 minute. Gone down by 3,400. However, the system is more robust. That's just my opinion. Just wait for this to load. And let's bring this Excel sheet up again. In sheet 3, the target is 5.1 and the stop has been altered. And actually optimized just one variable, which was the long stop. And the optimal came out to be 7.8. So stop is wider than the target. So what that does drastically increases the percentage of the winners. It's almost double. So naturally you've got a lot more winners. The risk reward ratio has fallen through the floor. You remember from the last sheet, an average of about 1.13, sorry. And the important thing is, as I've written in my little notes here, after setting a wider stop, most of these have gone up. So this 1 minute time frame, look at sheet 2 was 22,000, sheet 1, 17,000. And sheet 3, just by changing 2 settings, it's gone up to 75,000. Making the stop wider and the target wider also reduces the number of trades, and overtrading is generally bad. But this is still the best time frame, but this time it's generated 123,537 from 725 trades, whereas sheet 1 is 87,000 from 776 trades. So it's made a big difference. And the equity curve, sorry, not the equity curve, the distribution is more robust because they're almost going up to the peak and almost all going down. So I like this much better. And those of you who are very, let's say the right word, studious is the right word. So we've got 5, 6, and 7, which are looking very good. Now, that is 360 seconds, and there's nothing to say you can't test 350 seconds, which would be here, or 370 seconds, which would be here. The problem is by doing this, there's not so much data available in the chart because I believe, or I don't know for sure, these charts are constructed from 1 minute bins. A bin is basically the data is memorized the high, low, and the close of a minute chart, and therefore it computes very easily to do 2 or 3 or 4 or 5 or 20 or whatever minutes using these bins. But when you go to seconds, it takes a lot longer to load, and you can't load up so much data. So you have to load up the data. So you go for 370 seconds, load up more bars than it has, and then check what the first date is, and then set up the 6 minute chart to the same date, and then you can make a comparison. The chances are I wouldn't make that much difference, but it's good to test. So these are good conditions, nice gentle uptrend. So just look at the equity curve. So we're going back. So this is from sheet 2 with the settings as shown. Sortino ratio is 1.25. 913 trades, 52% profitable. Risk reward ratio 1.13. 1.37 trades a day on average. So the equity curve looks much better. Starting to get some kind of synchronicity between the strategy pattern recognition and the pulse of the market. There are still some spiky bits, but generally this is kind of usable. The pain generally wouldn't be too bad, but even though right at the beginning here that went down minus 9,000, that's with the S&P futures with $50 a point. If you trade in the micro contract, that'll be about $900 down instead of 9,000. So that's the difference. So we've had a look at some examples. I'm just going to flick through. There's a downtrend starting here. The red line crossed above. No trades at all. If I enable, I can just show you for a moment. So disable the strategy. So allow short selling, which is described as allow shorting. Click that, apply, wait for it to load. So there's a short. It said it's filtered. So it's filtered by this. So this is showing a downtrend, and it's taking some shorts. Surprising there's no shorts here. It's quite a fussy pattern, but it's quite reliable on this time frame. There's a bunch of nice shorts, but they're going for small profits. And the other thing you can do with this, I'm just going to put that off. So use the trend filter. So it's set to 1. You can set it to 0, and that means it's not used. Okay, enable. So now it will trade whenever it wants, when it sees the pattern, and the equity curve will be entirely different. So these now say unfiltered short and unfiltered long. First time I looked at this equity curve, 5 minutes, probably going to be a bit messy. So what did we have? So this is sheet 2 performance. Sheet 2, 5 minutes, 73. So actually it's actually done better without the filter in this example, but it's not always going to be like that. The equity curve starts off very badly and gets better. This is the kind of thing that I like. It's nice and smooth, but some of this is a bit difficult, hard to stick to. I'll put everything back to as it was, otherwise I can't standardize what I'm trying to show you. Use trend filter 1. Okay, now I'm going to change this long stop. From memory, that was 7.8 came out optimal. You can see these hover over points, explain what they do. I put these notes in so you don't have to keep looking at my website to read what they all mean. Okay, let's check. This is all the same. 7, yes. Allow shorting is off because this was a long only demo. So profit target, I'm just going to refer to my sheet here. That's sheet 2, 5.1, 4.1. On sheet 3 we go 7.8, 4.1. Target 4.1. 7.8. Right. Enabled. So again, when I optimized it, I only optimized one variable, and that was the one that came up best. However, I only went from 1 to 10 ATRs. It could have been one which was 37.8 ATRs, which was better, but the general idea of a system is to set the thing up in a way that you can use. So if you don't like the way it trades, you wouldn't be able to trade it. It's important to know your own trading style before you start setting up. For me, this is easy to use, you know. A little dip, it buys, it sells. That would annoy me somewhat because generally I like trend following and I'd be upset I missed that. But I've got this in the bank, and here again, could have got more. But remember, this has been optimized now, so you can't argue with the hypothetical results because this has got the benefit of hindsight. So now we go to our, this is, just got to open the system report. So this is M5, 5 minutes. Let's look at the ratio. Sortino 1.04. Not as good as it was with the 6 minute. 70% profitable. 0.51 risk reward ratio. 1.3 trades a day. The equity curve is much more gentle. There's obviously still a few nasty spiky bits. Sometimes futures can be spiky. It is their nature. Can move very quickly. In the old days, there used to be a very gentle ebb and flow to the markets. But once we went over to the electronic dealing, the UK version was called SETS, Stock Exchange Trading System, and it was electronic, and the market maker spreads used to be like there might be 5 or 6 market makers, and they'd have quite wide spreads, but if you took the best of them, you'd get a reasonable spread. With the electronic system, you had very kind of strange, spurious results with lots of spikes, and sometimes you get this factor phenomenon called backwardation, where the bid and ask were round the wrong way. It took a lot of getting used to. Um, the younger people seem to find it better. Personally, I preferred it as it was. So if we look at this now, and this is only 2 variables that have been optimized. So we're up to the biggest number, 1401.35. That's interesting. I saw that much higher earlier on. I may have changed something without noticing. So yeah, in the old days, you'd have a falling market, and if you wanted to trade, you'd have to make a phone call, and the market makers knew you'd be trying to sell, and they wouldn't answer the phone. So you used to get these lovely trends going on and on and on for a long time. And if you were one of the first who could deal electronically, um, you had the best of both worlds. You had the speed of execution, and you could trade the lag of the market makers not wanting to answer the phone. Unfortunately, that's not the case anymore. So this is why we have all this spiky stuff. Now, this is very nice, this bit, and that's very nice. Again, starts off quite badly. So going back to the purpose of this video, um, here is pretty close to a bell curve, which means the settings selected are reasonably robust. And that's what I always try to aim at. So I'll just see if there's anything else I can show you with this before we finish. Um, okay, let's just disable it. So I'm going to change this to make it slower. So now a 20 period average has to be rising before it will take a trade. So the signals will be later. Let's see what that does to the strategy performance. I reckon it would be worse, but let's see. Oh, that's a lot worse. I'll try and making it faster. The equity curve, though, is still reasonably good, but profit was less than a half. Let's try it going faster. It was 7, I believe, so let's try 5. You can, of course, use the strategy optimizer to be quicker, but sometimes it's nicer just to put the numbers in yourself and look at it and log the results. Then you can actually know where you are. If you don't log the results, it's very difficult to remember. So that's the same as it was before. Let's make it faster still. Read a very nice little book the other day I'd like to tell you about. It was called How I Made $2 Million in the Stock Market by a guy called Nicholas Davos. I hope that's pronounced correctly. And he was a dancer who traveled around the world. And he didn't know anything about trading. And this is basically a diary of his learning procedures. And he developed something called the Davos box system. And he wasn't believed. A lot of people didn't believe, and they spent a long time going around his brokers proving that he did actually make £2 million. But his technique was to look for good behavior in stocks, and then he would buy 3 or 4 tranches until they broke down into a different box. And it's a very nice little book, very simple. So the basic structure of his method was pyramiding, roughly equal amounts. When he'd locked in the risk of the first one, he'd buy another. And the most important thing, it was instrument selection. So he wasn't buying things that had a chart like Tesla or Microsoft all over the place. He was buying stocks like GoDaddy, which have very, very small retracements when the market goes down. In the last few months, it's only having small retracements. They're quite hard to find, but the logic behind it is that a stock like that is being hoovered up by insiders, directors, friends of directors, etc. So every time it has a move down, they're grabbing it as quick as they can because they believe things are going well. And that was his logic, which seemed like pretty sound logic. So that's interesting. I changed it a little bit and it's gone right down. Maybe that was already the optimal. But again, the equity curve looks good. So that's the depth gauge strategy. And that's on the SP 500 Futures. And thanks very much for watching. I'm going to pause now.